Before the fall, in my opinion, the market was fairly valued, and this fall was because there was a lot of hot money that had come into Japan, sort of very short-term money, very reactionary money. And then when the market started to sort of react to the US tech market disappointments and concerns about that, that hot money started to leave. And there's also a lot of money that had been invested on margin. So once it starts to fall, if you've bought on margin, you need to close those positions. So I think that's what really drove the market. In my opinion, for longer term investors, this is a very good opportunity to enter the Japanese market. I think it should recover most of the falls over the next, 12 months and maybe sooner.
Wow. Okay, so you're looking at what's happening as an opportunity. Here's the thing, though, Zuhair. We've been talking to a number of Japan experts, right? And you're just the latest one. And one of the things that they've been saying to keep an eye on is Japanese money. I mean, the hot money you've been talking about is mostly foreign money skedaddling out of Japan, right? But Japanese money that's outside right now, coming home, the financials, the insurers, etc., when they see they can finally make a decent return at home for the first time in, probably more than a decade. A, that would be good news, but B, wouldn't that mean further demand for yen driving it up further and exacerbating the unwind?
So I think, this is really a very important point because you saw the weak consumption number, and consumption is weak. A big part of that is the weak yen. So I think as the yen strengthens, yes, we will see some slight reduction in the earnings of Japanese exporters, but it'll be very positive for companies that are focused on domestic demand, that are importers. And that really, is a huge part of the Japanese economy. People put too much emphasis, for example, on inbound tourism and their spending. So you have 30 million inbound tourists who come in for a week and they spend, but compare that to 120 million Japanese who spend 365 days a year. And if their purchasing power is hurt, then that has a much bigger negative impact. And the weak yen on higher energy prices, higher food prices was hurting consumption. So I think a stronger yen will actually help Japan.
Zuhair, we've spoken to some other analysts who've said that going forward there could be opportunities, particularly in terms of some of those small cap stocks. Do you also see that? And if so, where would be the potential sectors?
Right. So I'm primarily a large cap manager, but I do agree that the large cap rally was rather overdone. And small cap stocks have been completely ignored. So there's definitely better value on the small cap side than there was on the large cap side. But given this fall, I think we can continue to invest on the large cap stocks, or we can once again invest on the large cap stocks. On the small cap, I think you need to look at the individual companies rather than sectors. But again, I would say that I think the yen will continue to recover, and this should help domestic demand-driven small cap stocks.